Hello, everyone, and thank you all for joining us for the Giving Question webinar, focusing on assisting clients with effective philanthropy.
Kia ora koutou. Welcome, everybody. My name's Cheryl Spain, and I'm the Executive Director of the Gift Trust. We're really happy that you're here today. We know that some people may still be joining as well. The Gift Trust is a philanthropic trust, and our mission is to help donors who give large amounts to charity to manage their philanthropic giving on their behalf. And we are really delighted to co-host this webinar today with Dentons, because we would like to help advisors to better understand the charitable giving sector so that you can all advise clients in the best way possible in their philanthropic giving. Just a teeny bit about me. I've been running the Gift Trust for the past 7 years, and I've been involved in philanthropy and the charitable giving sector for over 20 years, both here in New Zealand and also in the UK. I'll pass over to Jessie to introduce herself.
Thanks, Cheryl. I'm Jessie Rose. I am a Senior Associate in our National Private Wealth team, working from the Wellington office. So I focus on advisory work, assisting clients with personal asset structuring, things like trusts and tax advice, wills, relationship property matters, governance and administration, and strategic philanthropy. Dentons was keen to pair up with the Gift Trust and deliver some training on this topic, as effective philanthropy is so important for many of our clients, but it's not always done well. There can be a bit of a mismatch between charitable intention and impactful giving, and our team have a depth of experience to assist with this at all stages of the philanthropic journey. So what we're going to cover today is the philanthropy sector of Aotearoa. We will include a closer look at charities as part of this piece, and then we're going to move into giving options. So that will be for individuals, corporates, and alternate option providers. We'll touch on tax credits and donee organisations, a bit on international giving, some tips for due diligence, and the when, why, and how to discuss philanthropy. We'll finish up at the end with some questions. So if you've got any of these, please feel free to pop them into the chat. We've got a couple of colleagues who are helping us to collate all of these, and we'll do our best to address them at the end. If there's any we don't get a chance to get around to, we'll come back to you after the webinar.
So we thought we would just start by giving you an overview of the charitable giving sector here in New Zealand. These stats all come from either the World Giving Index or the JB Ware Cause Report, which is done here in New Zealand. And first of all, I'll just say it is actually quite tricky to measure this type of work in New Zealand. We don't gather fantastic statistics here, and it's not always recorded year on year in the same way, but these are the most recent statistics we can find. So on a per capita basis, some people are often surprised to hear that New Zealand is in fact the 5th most charitable nation on earth. We do give a lot of money to good causes, which is great to know. There's varying studies on how many of the percentage of the population give, but currently it's estimated at between 57 to 61% of the population give, and in other studies it's shown to be even higher. And we do contribute, individuals within New Zealand contribute $3.8 billion to the charity sector. That's a 2018 statistic, so it may have changed a little since then. So it's a very large sector, as you can see.
Now, moving on to have a look at the philanthropy sector of Aotearoa New Zealand. Starting with the basics, philanthropy is the desire to promote the welfare of others, especially by way of the donation of money to good causes. The word actually comes from ancient Greek, broadly meaning a love of humanity. Now, the philanthropic sector of New Zealand sits alongside the charitable sector. What we're going to focus on today is the grant makers and funders, which can have a lot of crossover with the grant recipients, but they're not quite the same thing. So this slide is intended to show the variety of funders and grant makers in New Zealand, both big and small. Now, we do want to note this is just how we've chosen to categorise the various entities involved for today's discussion purposes. There are no hard rules for this. Many of the categories overlap, and it's common for certain entities or groups to play multiple roles. For example, charities can be both grant makers and recipients. Now, if we start on the left of the slide, we've got the state funding that comes from the government and local councils. And to briefly mention the statutory trusts, which is those that have arisen by operation of law under statute, we've got 3. We've got the community trusts, the energy trusts, and the gaming and licensing trusts. The community trusts were set up when the regional savings banks were sold in the 80s and 90s. The proceeds were invested and the income generated from that is given as grants to communities in the relevant region. We've got 12 of these in New Zealand. The energy trusts were also set up in the 90s when the electricity supply authorities were restructured, and there's 25 of these operating regionally as well. And then the gaming and licensing trusts are funded from gaming machines and New Zealand lotteries. And I think it's around 40% of the proceeds are distributed to community projects or various statutory bodies like Sports New Zealand or the New Zealand Film Commission.
Thanks, Jessie. And in this presentation, we're actually going to be focusing on the middle boxes in this slide. So that is the charitable trust section and what we're calling here hybrids. And these are the options for conducting philanthropy that tend to be the most common and the most familiar. So here in New Zealand, in terms of legal structures, setting up a charitable trust has historically been the most familiar and the most common type of philanthropic entity. And we have the Charitable Trust Act, which provides a framework for trusts to incorporate here in New Zealand. Decision-making is done by trustees, and these can be either individuals or companies. And some charitable trusts then also choose to become a registered charity with Charities Services, which is the regulatory provider here in New Zealand. But it is important to note that it's not compulsory for a charitable trust to register with Charities Services. We'll touch on that later. Companies can also set up a separate charitable trust for their giving if they choose, and it is possible to add a charitable purpose into a company's constitution to meet the requirements for a charitable organisation. But we did just want to note here that care needs to be taken a little around naming, particularly in corporate trusts. I notice here in New Zealand a lot that companies have a tendency to name their philanthropic arm a foundation, the such and such foundation. And I think, Jessie, you might have some thoughts on the legal terminology here.
Yeah, look, New Zealand doesn't recognise foundations as a separate legal entity the way that other overseas jurisdictions do. So in many jurisdictions, a foundation is a separate body corporate, traditionally viewed as somewhere between a trust and a company. The name foundation is typically used by entities that are fully funded by those who establish them. Here, foundation is a common name for charitable entities, but those entities will technically be something else, like a charitable trust or an incorporated society. So it's just worth keeping in mind.
Thanks, Jessie. And we're just going to move on to what we've termed here hybrids. These are often an overlooked but a powerful tool as a philanthropic giving vehicle. Now, there's a couple of options here. We wanted to highlight donor-advised funds, and we'll be talking about that quite a lot in this presentation. So the gift trust that I manage is technically a donor-advised fund. Donor-advised funds are the fastest growing form of philanthropic vehicle internationally, but they are still fairly new here in New Zealand. It's a type of philanthropic entity that enables a donor to set up an earmarked fund under the shared infrastructure of a donor-advised fund. And the donor-advised fund provides all the charitable due diligence, compliance, management of funds, legal infrastructure, but the donor retains the control over where and when the funds are donated. And I'll touch on it more as we go through the presentation. Other hybrid options include limited partnerships or joint ventures, which is growing in popularity in New Zealand. And this allows commercial and charitable entities to work together without compromising either of their tax status. I'll pass over to Jessie to talk about the grassroots options.
On the right-hand side, we've got our sort of catch-all category here. And there are other not-for-profit organisations which don't easily fit into one of the categories that we've talked about. So an example would be a grant-making trust that is not a charitable trust. So often these are things like unregistered charities or social enterprises, and we've just popped them there under grassroots/other. And then finally, we've got businesses and individuals. So it's worth noting that a lot of charitable funding comes from broad mass market individuals. That's generally a large number of people giving relatively smaller amounts. This is one of the simplest types of giving, but it does have a significant impact. And then businesses can do similar. They can either give directly to charitable causes or through volunteering and pro bono activities or in-kind support. They can offer that support through part of their CSR initiatives.
So moving on, we wanted to take a closer look at the recipient charities that larger donors might be giving to. The charity sector is much broader than people realise in New Zealand. There's roughly 28,000 registered charities, and they make up an annual total income of 21 billion New Zealand dollars. And the sector employs roughly 145,000 full-time staff. That's about 5% of the New Zealand workforce, so it's sizable. I'll pass over to Jessie to talk a little about what constitutes becoming a registered charity.
Thanks, Cheryl. So yes, we have a lot of registered charities per capita in New Zealand. And as we've mentioned, registration is voluntary under the Charities Act 2005. To be registered, a charity must be established and maintained exclusively for charitable purposes and not carried on for the private pecuniary profit of any individual. So what is a charitable purpose? There are 4 categories which stem all the way back to the English Statute of Elizabeth in 1601. We've got relieving poverty, advancing education, advancing religion, and other purposes beneficial to the community. So that's things like advancing health, perhaps through public participation in sport, or supporting charitable needs like old age, disability, homelessness, or protecting the environment. Now, these purposes must also provide a public benefit in order to be considered charitable, and there's quite a lot of case law around that. There's a lot of advantages to being registered as a charity. So the charity can refer to itself as such. There are various tax benefits that are associated with registration, including exemptions from income tax or resident withholding tax, local authority rates, and various GST advantages. There is eligibility for donee organisation status, which we'll touch on shortly. And then there's the improved public trust and confidence, which comes with being a registered charity. On the flip side of this, the obligations that are associated with it, the charity must operate in accordance with the Charities Act 2005. It must carry out its activities to advance exclusively charitable purposes as per the definition. It needs to operate in accordance with its rules, and importantly, it needs to report annually to Charity Services, Ngā Rā Tonga Kaupapa Ātawhai, in accordance with the Tier 1 to 4 reporting standards. Charities are also required to notify Charity Services of any changes to the organisation, and their information is publicly available, which is a big one.
Now, we thought it was worth pointing out that there's also, in addition to that, roughly 100,000 unregistered charitable organisations in New Zealand. Now, being an unregistered charity doesn't mean necessarily that they don't have charitable purposes. It does mean that they're not obliged to report in the same way as a registered charity. But there are a number of structures and reasons why an organisation might choose to be an unregistered charity. We'll touch on some of the due diligence that can be done if you're advising a client on how to support an unregistered charity later on. Some of these groups are set up as an incorporated society, some are charitable trusts, but they're not registered, and some might be working under the umbrella of what we would call a fund holder. We just thought we'd give you an example of that here. So here at the Gift Trust, we run a side project called the Gift Collective. It's a charitable fund holder. So basically, it's an umbrella for small unregistered charities, and it allows them to gain the due diligence and compliance from a larger charitable entity. We are currently umbrellaing around 50 groups, and so far they've received over $1 million in funding. It provides them that extra checking over what they're doing and to make sure that it does cover charitable purpose. So one of the main benefits of registration as a charity, as Jessie mentioned, is eligibility for donee organisation status. And that means that when a donor gives to the charity, they receive a tax credit. We'll touch on the intricacies of that a little later on in the presentation. Thanks, Jessie. So here, we'll touch on some giving options for when you're advising clients on their individual giving here. Now, this is really a spectrum of the ways that individual can set up their charitable giving. And we've got the more simple on the left, right through to the more complex and burdensome on the right. So at one end on the left, we have just simple direct individual giving that donors can manage themselves. This is great for the everyday smaller donations where individuals are happy to decide which charities to support and check their credentials, make the donations directly themselves and manage receipts, etc. But we would advise that for larger donations where the risk may be higher, or when a donor wants to have a bit more of a strategy behind their giving, that a more formalised structure is better. It just allows them to plan their giving much more strategically. So in the middle box here, we've got donor advised funds, and I have explained briefly what the concept is at the beginning. The advantages of setting up a philanthropic fund with a donor advised fund provider like the Gift Trust is that clients would have a trusted advisor and partner for their giving who's already embedded in the charity sector. They don't have to worry about setting up a new legal entity or any of the charitable compliance or due diligence, as the donor advised fund covers all of that on their behalf. And the other huge advantage is that we can help them with their philanthropic strategy and planning to find charities that meet their brief. The donors still retain the decision-making power, but essentially they get independent guidance and support. There are also other advantages, like they get one simple tax receipt at the end of the tax year for all of their gifts, and the funds can grow tax-free in the fund whilst they are waiting to decide where to distribute them to. Jessie's going to cover the other end of the spectrum now.
So if we look at setting up a charitable entity, this can be a great option, creating an entity that holds and protects assets for a charitable purpose. It also allows for a greater degree of oversight or control if donors are concerned to be more involved in the application of their charitable giving. I'll focus more on trusts here, as this is probably the most common vehicle for grant-making organisations. But as we've mentioned, you can also have charitable companies or incorporated societies. Now, charitable trusts, unlike ordinary trusts, can be established in perpetuity, so there's a real opportunity here to create a lasting benefit. Generally, setting up a charitable trust works best when there's enough funding to allow for ongoing charitable giving and capital growth. We would recommend that clients have a sizable amount that they wish to put aside for this. And although that's not exactly specific, it's consistent with the public trust's recommendation of around 300,000. Cheryl, when we've spoken about figures, it's pretty hard to put any sort of one size fits all rule in place, isn't it?
That's right. I mean, it's not a science, but that 300,000, perhaps to 500,000 mark is a figure that sometimes people use that a client would need really to have to warrant the time and effort involved in setting up a separate charitable entity. But it really does depend on what the client's goals are. I mean, we have donors that sit under us at the Gift Trust and use our structure, even though they have multi-million dollars to distribute. And we also operate at the smaller end as well. So I think it depends on how much control they want to have, what their goals are of their giving ultimately.
Yeah, thank you. Now, it's also worth noting that compliance costs have been generally increasing. So while trusts are a great flexible vehicle to accomplish all sorts of asset planning and charitable giving goals, they do need to be properly administered, and this tends to come at a price. So we had the introduction of the Trusts Act in 2019, and the general moves worldwide to greater transparency and information sharing. Generally, it just means there's more of an administrative burden on trustees than there used to be. Now, while there's no cost to register a charity or incorporate as a trust board, there are annual return fees if the entity's annual income is over certain thresholds, and there's the cost associated with complying with the various reporting standards. We thought it'd be helpful just to put a quick word about investment in here. So while trustees could make investment decisions personally, they're generally subject to a duty to invest prudently unless the respective trustee contracts out of this. Now, accordingly, they must exercise the care and skill that a prudent person of business would exercise in managing the affairs of others, having regard to any special knowledge or experience that they have or hold themselves out as having. Now, generally, this duty of prudence would require a trustee to seek professional investment advice, and it would not usually be advisable to attempt to DIY here, given how highly specialised the investment management profession is.
Thanks, Jessie. Well, moving on to corporate giving options. Again, this is on a spectrum and it is a little bit similar to individual, but there are some slight differences here. So on one end, we again have some companies who simply manage their charitable giving internally within the company. Perhaps they do it through a separate division or through someone's particular role. They don't set up a separate entity to do it. Next, in the middle, you also have companies that can set up a fund with a donor advised fund like the Gift Trust. We currently manage, just to give you some examples, the corporate giving on behalf of restaurant brands here in New Zealand who own the KFC franchise, among others. We also manage the corporate giving of Rocket Labs who do some scholarships through us. So companies can get support in a similar way. And other companies choose to set up their own independent charitable entity Some examples in New Zealand include the Simplicity Foundation or Aotearoa Foundation, which was previously known as Vodafone Foundation. So Jessie will explain a little bit more about how companies can do this.
Thanks, Cheryl. So if we're setting up a separate charitable entity, we're talking about something that's legally distinct and separate from but associated with the company in question. Now, it's really important if a company is going to go down this route that the charitable entity is actually independent. So what we would like to see is some independent officers and some good conflict of interest provisions in the governing documents to try and mitigate against potential issues that could arise here. Now, a lot of the considerations on this page are actually similar to what we've just discussed in terms of individual giving. So the different options come with different levels of cost and complexity, and selecting which one is appropriate will be determined by the business's goals and needs. It's also worth noting, just to finish off, that businesses do receive indirect benefits from corporate giving in whatever format that is. It's part of their demonstration of their commitment to their communities and their actions as good corporate citizens. So with the alternate giving option providers, we start on the left here with the community foundations. Now, these are a great example of place-based philanthropy. It's a relatively young movement in New Zealand. I think it began in the early 2000s, but the concept started over a century ago in the US when communities began to pool funding to address local issues. There's 17 community foundations in New Zealand working to make a positive and lasting impact within their respective region. So that means about 85% of the population has a local community foundation if they wish to give in this way. Now, generally, the foundations work to build permanent funding streams to achieve long-term community transformation. The gift that a donor gives is invested and grown, and the income earned is applied to chosen causes. So most foundations offer a range of funds benefiting different priorities. They don't tend to benefit a single cause, but they focus on a place and its people. Now, again, these entities are registered as charities, so donations to them are tax efficient. Donors can establish a named fund if they wish and advise when grants are to be made to the local community. Community foundations tend to be well connected within their region, and they can be a good option if a donor is wanting local knowledge and insight. They also handle the administration and have a level of expertise in grant making, which an individual may lack personally. The Nico Foundation is the Wellington example, established in 1991, and I think it's guardian of almost 32 million that's been invested to support the region and its communities. Whereas if we look nationwide, the community foundations have got more than, I think it's about 130 million of funds under management and have made grants of more than 20 million over the last 5 years.
Thanks, Jessie. Now, I've talked a lot about donor-advised funds already, but the key difference between perhaps a donor-advised fund and a community foundation is perhaps the flexibility of where donations can be given. So at the Gift Trust, donors can distribute their donations either internationally or within New Zealand. So there's much more flexibility than just place-based giving. And they can do both tax efficiently. We also offer a lot of flexibility on whether clients want to build an endowment or to just run their fund like a pass-through fund, whereas community foundations are much better at building just an endowment only for their particular region. And then we wanted to touch on the professional trustee companies here in New Zealand. So we've got the likes of Perpetual Guardian, Public Trust, and Trustees Executors. Now, Perpetual Guardian and Public Trust can both provide support for philanthropic trusts. Both of them can manage and administer philanthropic charitable trusts, but importantly, the crucial difference is the individual must first set up a separate charitable trust legal entity. They can also both provide professional trustees to act on behalf of the individual too. And their focus does tend to be a little bit more on bequests that they manage on behalf once people have passed away, rather than on living donors. So that's the key difference there.
Management support sounds great there. And am I right in thinking clients can pick and choose these services in isolation of using the provider's professional trustee services, or is it more of a package deal?
No, that's our understanding, that they can pick and choose and have a conversation with these providers about which service to use. So definitely worth exploring. They can be good options for the right clients.
Great, thank you. So moving on to have a look at tax credits and donee organisations. one of the main advantages of being a donee organisation is individuals who give cash donations of $5 or more to one of these organisations may claim a tax credit of 1/3 of the total of all their donations, up to the amount of their taxable income. There's a 4-year time limit for doing this. Corporates have a similar mechanism, but they receive a tax deduction limited to their net income. And it's worth noting here that companies includes close companies, so private vehicles can benefit from this policy too. Then we come to the question of what is a donee organisation. So that's defined in the Income Tax Act 2007. We're going to focus on the part of the definition that covers a society, institution, association, organisation, or trust that is not carried on for the private pecuniary profit of an individual and whose funds are applied wholly or mainly to charitable, benevolent, philanthropic, or cultural purposes within New Zealand. Sorry, a bit of a mouthful. Now, it's not always necessary to be a registered charity to receive donee status, but from 1 April 2020, if the organisation has only charitable purposes, it must register as a charity to obtain this status. Now, Charity Services updates Inland Revenue about registration of charitable organisations that qualify for donee status, where they've indicated they intend to receive donations, and Inland Revenue maintains a list of approved donee organisations which donors can check. I will note here there are a few other routes to achieving donee status. So, for example, an entity could be approved by the Commissioner of Inland Revenue, and that path is for entities which have benevolent, philanthropic, or cultural purposes but are not registered as charities. Or a charity, or you can go for inclusion in Schedule 32 of the Income Tax Act, which is for entities that apply a significant part of their funds other than for those designed purposes within New Zealand. So this is applicants for overseas donee status, and inclusion in this schedule requires the approval of Cabinet. But Cheryl's going to touch a bit more on what this wholly or mainly requirement means.
Sure. So the IRD currently uses interpretation statements to emphasise that a charity's purpose to be a donee organisation, their purpose must be applied wholly or mainly within New Zealand. Now, how they're currently interpreting that is that 75% of their work or funds must be spent and achieved for purposes to benefit New Zealand or New Zealanders, and the other remaining 25% can be to benefit international. But the IRD have gone a little bit stricter on this recently, so things may change in the future. This is their current interpretation. And that 75% can be averaged out over 3 years, so it does allow a little bit of flexibility. But I wanted to touch on here on options to facilitate international giving. We know that a lot of donors here in New Zealand might like to give internationally, and if you're advising clients in that space, there are other options to give tax effectively. Here at the Gift Trust, we can facilitate, and we do facilitate, substantial donations to overseas charities. We can do that because of our umbrella status and the number of funds flowing through us. So we can provide a New Zealand donor with a tax receipt as long as we stay within our own 25% annual threshold of only spending 25% of our total donations internationally. We do, of course, have to check the credentials of the international charity in advance, and we would be checking that they meet the equivalent charitable status in their home country. But we do currently have quite a bit of capacity to make more international gifts. So if anyone out there is working with clients in this space, we'd be very happy to talk to them afterwards.
Now, while we're on the topic of international giving, it's good to consider the reverse of this. So incoming international giving, which Cheryl's going to speak to some more.
Yes, that's right. So if you have international clients who want to give tax effectively from other countries, but they want to support charities here in New Zealand, then we at the Gift Trust can help. We've recently joined an international partnership called the Asia Pacific Giving Network, and we are just about to join a larger network called Myriad, which is a network for cross-border giving. And this provides us access to a really wide range of trusted philanthropic partners all around the world, and it allows donors to move charitable funds cross-border more easily and get the benefit of trusted partners who can do the due diligence and also cover all the AML requirements. So currently there's a list here of the countries that we have partners in, We are utilising our fund in the US quite a lot at the moment. So anyone who is interested in and has US tax resident clients who wants to give tax effectively through a fund in the US, but have it distributed to any charitable cause in New Zealand, we already have that route all set up and ready to go. It's very popular. These are the list of other countries where our newly forming partnership will cover, and it includes Hong Kong, Australia, mainland China, Singapore, Japan, South Korea, most countries across Europe and Canada. So we're very happy to have some conversations about how that works in detail if anyone would like to contact us afterwards. So let's talk about due diligence before giving and before you're helping clients to make these decisions. There are many ways to help clients with their due diligence before they make particularly a large donation. And I would advise that the key here is to focus on what the donor's goals are, what they want to achieve through their giving. Essentially, what change do they want to make in the world? Because that will affect what you look at in your due diligence. It's not necessarily a one-size-fits-all. Some donors that we work with, for example, want to look really deeply at the financials and dig into the budgets of an organisation, while others might want to focus on the staff team or board diversity within a charity. And there's many other issues. So I think having that conversation first will set the context. Jessie's going to talk a little bit about what sort of due diligence information is available out there.
Thank you. So providing publicly available information is part of the trade-off that charities make for their charitable status. So this helps with their accountability to the public. So if we're talking about registered charities, up there on the slide are some great sources of information that you can check. The New Zealand Charities Register is maintained by Charity Services, and the register provides information including the charity's name, its registration number, its current status, contact details, purpose and structure, officer details, and documents, really importantly, like financial statements, annual returns, and the charity's governing documents. There are also separate registers for charitable trusts, incorporated societies, and companies that are maintained by Companies Office. Those tend to have similar information to that on the charities register, but sometimes a bit less of it, depending on which one you're looking at. Now, the primary documents can be really helpful, so you can check whether an entity's purpose lines up with your understanding of what it does, whether that's consistent with their trustees. And then financial statements, these must be filed for the larger Tier 1 and 2 charities. Tier 3 and 4 charities file a performance report instead, but both sets of documents provide information regarding assets, liabilities, income, and expenses. Now, international resources can be really helpful. Many of these will be able to provide similar information or even more than their New Zealand counterparts, together with other helpful resources. So you've got the American Inland Revenue Services, you've got the Australian Charities and Not-for-Profits Commission, and England and Wales Charity Commission.
Thanks, Jessie. Now, when I talked in the introduction, we did touch on unregistered charitable entities. There are many of these in New Zealand, as we said, and obviously you wouldn't be able to find publicly available sources of information for your due diligence on these groups. But if clients want to support an unregistered charity, there are also a range of things to consider. Depending on what type of structure they have, you can still ask the group for some of the similar things that Jessie's mentioned above and that we'll talk about next, but they're just not publicly available. So it's just important to have that conversation with the group. We do give on behalf of our donors to unregistered groups, and one thing that we do that I'd encourage others to do is to set up tailored grant agreements, and that can specify exactly what charitable purpose the grant can be spent on. So that's one way of setting up a due diligence process in advance. Another option is to potentially look for a fund holding registered charity who could receive the grant on behalf of the unregistered charity, and they would be there to ensure that it's spent according to the donor's wishes. This is what our side project, Gift Collective, does, which I talked about earlier. It's a really good option if you're wanting to make a very large grant on behalf of a client to an unregistered group. You're really looking for somebody else who is independent to make sure that that grant is spent according to the wishes and exactly what it was set out for by the donor.
Now, if we move on to what you should be looking for when you're conducting due diligence, One of the first key ones is the entity's registration current. So charitable entities can actually lose their registration if their purposes and activities change and are no longer charitable, if there's a significant or persistent failure by the organisation or if its officers to meet their obligations, or if it engages in serious wrongdoing. You can also check to see whether or not the entity is up to date with its compliance obligations, so annual returns, filing of financial statements, etc. Then you can have a look here to see what proportion of funds are actually spent. So is it operating a spend down model or is it operating an endowment type model? They can be quite different and both have strengths and weaknesses. It just depends what your client is after. Then the fourth bullet point, which proportion of funds are spent on administration and other costs? So that's more a question of where money is being spent. I can see we've actually got a question here about the typical proportion of a donation to a charity that's lost in administration costs. Cheryl, would you like to speak to that a little bit more?
Sure, that's a great question. It is one we get asked quite a lot. Now, we do have some views on this. So I guess I would touch on the word lost. I do talk to a lot of clients who are really interested in how much funds organisations are spending on administration, but there is one really important thing to consider, which is that charities do need to often employ staff and do administration to do the important work that they're working on. So I just think really carefully about how you're defining that word administration costs, and it's not necessarily lost costs. It's an important part of their core work to fund operational costs. I don't think there's a magic percentage figure. Some people do have various percentages. I've heard 10%, I've heard 20% bandied around, but I don't think there's a magic figure. I think what it's about is diving into the financials of that particular charity, asking them what it is spent on, looking deep into what the core purpose of the organisation is, and are those costs that they're spending it on helping them to achieve their purpose. You might find actually that to run, I don't know, a youth work program, actually investing in great administration so they can track the outcomes for those young people is really important. So it's a bit more of a nuanced conversation than just a percentage figure, I'd say.
Yeah, it can be a bit of a necessary evil, can't it? You can't sort of have one without the other.
Yeah.
Okay, then impact statements are really useful if those are available. So these detail what impact the charity's funding has had on its causes, or more broadly, what the charity has accomplished. It can be really hard to measure specific impact, but if the information is there, it is helpful and or builds a bit of a bigger picture. The last point here in the top section is a bit more general. So if you find charities with purposes that the clients wish to support and which are operating in the correct geographic region, that helps identify options for the clients before conducting more specific research and due diligence on each one. So it's nice to know what's out there before you dive into the weeds.
That's right. And that lends itself a little bit to the next section, which is how we can help. So the Gift Trust can help in a variety of ways. We can do this sort of research in advance for donors into causes that meet their brief. And we can also conduct tailored due diligence on behalf of our clients. We also do network donors together. We run events on a variety of philanthropic topics. And of course, we manage the funds on their behalf and do all the distribution. So very happy to talk to anyone for more detail on that afterwards. And how about Denton's, Jessie? How can you help in these situations?
We can assist with structuring, we can assist with strategic advice or the actual charitable entity formation. We can help with governance and administration, bequests, due diligence, or advisory work. So really there's plenty of scope in there. If you've got a problem, there's a high chance we might be able to give you a hand.
There are also a range of other organisations out there who can help. So we just thought we'd list a few here. Philanthropy New Zealand is the peak membership body here in New Zealand for the philanthropy sector. They predominantly are set up to help more institutional givers, and it is more of a membership network where you can find out resources and information. Then there's the Centre for Strategic Philanthropy, which is a brand new organisation just set up in the last year, and it is a networking body more for individual givers, really just a networking body and a chance for people to share information. And then we have JB Weir, who provide investment, governance and strategic advice for the for-purpose sector. And they do also produce some really interesting resources and research into the philanthropic sector as well. So there's some ideas of where to go if you need extra support.
Great, thanks, Cheryl. Now, when to discuss philanthropy? We'll skip over this pretty quickly, but the great news is all the time. So there are many key events in a client's life that can open up discussions about philanthropy. Some examples there: if they're receiving an inheritance or doing their wills, if they receive a windfall or exit their business. The main point is it's an ongoing and evolving conversation. So it's not just something that comes up once and then you never touch on again. So the next part of the conversation is why and how we should be discussing philanthropy.
That's right. So there is some research out there. This was actually done on bequests, but in 2016, some research was done that found that only about 7.5% of people left a bequest to a charity in their will, but about 30% of people in their lifetime said they would do so if they were prompted or if they knew it was an option. So those figures do represent a huge gap, perhaps hundreds of millions of dollars in potential funding for charities, if only the clients had been given good advice. So I do think this is a really important conversation to be had. And Jessie, I know you have some thoughts on kind of how you can raise this topic, which some people can find quite intimidating to raise with clients. How would you go about doing that sort of thing?
Yeah, so look, we've got the why because there is a bit of a lost opportunity here. And then the how, this comes up quite frequently for lawyers, but will also be relevant for other advisors, so accountants, investment advisors, bankers. And it's important to remember that philanthropic goals can be addressed during life and after death. So you don't need to be focusing on one route or the other. Now, quick note, each body of advisors will be governed by their professional conduct rules as they are for all of their work. So by way of example, there's nothing specific in the lawyer's rules of conduct and client care about discussing philanthropy, but there can be this common misconception that it isn't a lawyer's place to do so. Now, we believe that it very much is an advisor's place to raise the topic, but we appreciate it isn't always the most natural conversation for people. Advisors should take comfort from a couple of points at the outset of this conversation. So firstly, as Cheryl spoke to at the start of the session, the majority of New Zealanders do give. The population is more generous than you may expect, and chances are the conversation isn't going to come completely out of the blue. And then secondly, there are those tax benefits associated with giving, particularly during a person's lifetime. These may be more at the forefront in some overseas jurisdictions, but they do still exist. Now, here, if you're not relying on a tax motivation, the conversation's more of a bigger picture, general planning one, which often in our experience is a better conversation to be having anyway. So then what it comes down to is a matter of timing, tone, and phrasing. And what we're aiming for is a conversation that's pressure-free and non-accusatory. Some examples we tend to use are things like, a few of our clients ... or have you considered XYZ? So it's not trying to force their hand or put them in a place where they feel they can't say no. Now, in terms of bequests, there's a few easy ways to begin the discussion. You can incorporate the question of philanthropy into a will questionnaire, and you can have explanatory material available about different options and structures. So that can be pre-prepared and used for multiple clients, which is handy. One more important point to note here is that any bequests should be future-proofed as far as possible. So although ideally lawyers would love clients to review their wills regularly to ensure they're still fit for purpose, this does not always happen. It may be that by the time a will is admitted to probate, the named charity beneficiary no longer exists. Now, while there are provisions in the Charitable Trusts Act 1957 which can assist in these circumstances, ideally we like to see bequests drafted flexibly enough to anticipate this sort of scenario and allow trustees and executors to deal with the situation with minimal hassle. Another option to address these sorts of risks is to use a bequest service or provider like the Gift Trust, or I think Perpetual Guardian offers the service as well, or you can utilise a structure like the community foundations. So again, the work can be front-footed during a person's lifetime, and then the plan can be implemented on death with some safeguards around the future-proofing part of it. Now, we appreciate we've gone into a bit of detail here, so we thought it would be useful to wrap it up with some key take-home points before we get to the questions. So the first one for me is structuring is really important. You should be thinking about this in advance with your clients, as it's their goals and needs that will determine which philanthropic structure will best suit their circumstances. And then the second one, I think there's a lot of information out there, which can be a little overwhelming for people, but there's also a lot of resource, both free and paid, which can help. So you should really spend some time with your clients, drilling down into their goals and needs, and then doing some homework before implementing a philanthropic plan. What about your thoughts, Cheryl?
Yeah, I have sort of similar, but slightly a couple of different take-home messages. So I think being focused on the donor's goals right from the beginning, but similar to what you said, is so important. I think asking the right questions up front about what are they aiming to achieve with their donations, that impacts everything later on, from working out how to do the due diligence right through to structuring the fund and right through to which charities to select. So asking those goals up front and what change they want to see in the world is so important. And my second take home is just to build in some flexibility where possible, particularly when structuring. We do see a lot of charitable trusts, philanthropic charitable trusts, getting into difficulty when they've been really restrictive in their setup around what types of causes they can support. And then in 20, 30 years' time, when this entity is still running and those types of causes are no longer around, or the world has changed, it's very difficult to then distribute the funds. So build in flexibility right from the beginning, or choose a structure which allows flexibility, is what I would say. Those are my key take homes.
Yeah, so if you forget the rest of it, 4 points will hopefully be a bit more helpful. Right, coming to a couple of the questions. We've got one here, which is, when discussing the availability of financial information on a charity, you mentioned the differences in disclosure for tiers 1 and 2 versus 3 and 4. So explaining a bit more about what the tiers mean, it's to do with the annual expenditure of a charity or its public accountability. So tier 1 charities, I think they've got over $30 million worth of annual expenses or public accountability. And they must comply with the full reporting standards. So it's a different level of detail required from them. I think tier 2s, they're under that $30 million threshold. And without public accountability, they've got a reduced disclosure regime. Tier 3 charities, they're under 2 million of annual expenditure without public accountability, and they can use simple format reporting and accrual accounting. And then tier 4 are the smallest charities. So their simple format reporting, they can use cash basis accounting. And I think they've got under 140,000 of annual operating payments, and again, without public accountability. So Charity Services has actually got lots of helpful information about the differences and distinctions between these ones.
Great. Shall I jump in with one that I've seen on the chat as well? So one of the questions here says, are you able to give an indication of the admin costs for gift trust donor advised funds that can be compared with setting up or running a charitable entity? Yeah, this is a great question. Obviously, cost is a crucial factor. We are a charity ourselves, and so we try to keep our costs as low and light as possible. We have a sliding fee scale. So it's a tiered fee, which ranges between 1% and 4%, depending on the size of the fund, the scale of the donation, and the amount of service that we're providing. All our fees are publicly available on our website, which is thegifttrust.org.nz. It's at the end, and you can go and take a look. So we think it's a pretty low fee structure, and very happy to have a conversation about fees for specific things as well. It's very hard to estimate that compared to the cost of setting up and running a charitable entity, because you've got legal costs up front to do your trust deed, then you've got ongoing admin, accounting, compliance costs, and it depends whether the charitable trust, of course, employs staff. So it's quite hard to have a ballpark figure on that, but we have been told that our fees are much, much lower than setting up a charitable trust in general, depending on the size, of course.
We've got one here about deductibility for gifts to donee organisations, and whether that's always been 33.33% for individuals or if it's fluctuated, and is there an argument for greater or lesser deductibility? To be completely honest, I'm not sure about the history of that, but I'm happy to look into it and I can come back to that person. There did used to be a cap on it, so there was a top amount of the rebate which could be claimed, and I think they removed that in 2009, which did open up further claims, so now it's only limited to the person's taxable income. In terms of whether there's an argument for greater or lesser deductibility, I'm sure there's an argument for everything, right? It would depend on how much people are motivated by that specific part of their donation, or whether it's also part of their broader goals and philanthropic journey, really.
Can I jump in there a little bit too, Jessie? There is a move within the philanthropic sector, I think, to do a bit of advocacy on this. And one of the things that we would love to see in New Zealand is to have some tax deductibility for non-cash donations. At the moment, in New Zealand, you have to donate cash to get your tax deductibility. In many other countries, like the US, for example, they can donate shares, they can donate property, anything like that, and they still get a tax deductibility. And we think that would be really interesting, because what ends up happening here is somebody wants to donate, say, a property to a charity. They end up selling it first, getting the cash, then donating the cash, and it's quite a convoluted process. So that's something, who knows, in future that may change, but it's certainly, I know that there's being talked about a lot in the sector. I do see another question here. Shall I jump in with this one? If philanthropists are looking for advice on which causes to support, what organisations can assist in this discussion, and where can they explore how to align with their values? Well, certainly we help a lot of our clients with this. This is the first step that we do at the Gift Trust when a client comes to us, is if they would like us to, we sit down with them, go through in a one-to-one what their values are, perhaps as a family or as a couple. We have a whole checklist of questions. We have a worksheet that essentially we run through to talk to somebody around setting up their fund and working out which causes are going to align with their values. And then we can do bespoke research. So we can take that brief and go out and find organisations that match their passions and enthusiasms. So we can help with that. But there are other organisations I mentioned earlier on the slide who might be able to assist through networking. I would suggest reach out to some of those entities, go along to some of the talks and events that are out there in the sector, where we have a recording of this presentation sent out to everyone at the end. So you can always look back at those other organisations too to find out more. Any other thoughts on that one, Jessie, from you?
Yeah, I was just going to say, depending on the type of donor, perhaps Philanthropy NZ or the Centre for Strategic Philanthropy, if you want to network with others and sort of brainstorm and swap a few ideas.
Right.
We've got another question here about the proportion of actual donated amount that eventually reaches the charity itself, as opposed to administrative costs and expenses. That's sort of specifically in relation to international charities. Have you got any different figures for the international piece, Cheryl, or is it more similar to the conversation we had before?
I think it's very similar to before. I haven't seen specific. It's different for every charity, to be honest. I've never seen a standard on this. So really, I think the key for me is if that's important to a client, then you're totally within your rights to ask the charity for those statistics. That is what we would recommend, because every single organisation is going to be having different levels of admin costs and operational costs. And it just really is. It's tricky to say, because it depends which country you're talking about the international charity being in. It's very hard to say how much reaches the organisation. I mean, one thing you can ask for is impact reports. Some charities do those. If they're done well, they can be great, because it can tell you how much of a proportion, how much of an organisation's expenditure actually gets to the end cause. But it is basically, I think, have a conversation. Don't take it as read. It's really difficult. It's hard. Sometimes we look at a lot of charities' financial accounts and statements, and sometimes you can look at a figure on there and make some assumptions. I think asking questions is so important. You don't have to make any, you can have a no obligation conversation with a charity, of course, ask them some questions and just find out what they say. It's the best way to go about it.
Great. Some good knowledge in this question. Donee organisations applying funds in New Zealand versus overseas mainly means more than 50%, not more than 75%, correct? Now, yeah, this is to do with Inland Revenue's interpretation of what that wholly or mainly requirement means. It did used to be 50%, but they changed it, can't quite remember when, and now the safe harbour is 75% or more. So they've tightened it up. It is now a higher threshold than what it used to be. And I think it's to do with mainly they do interpret as being over 50%, but when you pair it with wholly, which suggests more towards the whole total, they come out at 75%. So it is a bit of a moving beast.
I think it was changed in 2022 from my recollection. Can I cover this one? If someone donates a lump sum to set up a charitable trust, how do they maximize the tax efficiency of this? Yeah, that's a really good question. And I think conversations with accountants would help somebody work this through. But essentially, what you need to be looking at is, well, first of all, where is the donation coming from? Is it from an individual or is it from a company? Because there are different tax credit amounts from each. If it's from an individual, then you get the 33% per year, but it is capped at a maximum of their taxable income. So we do come across this quite a bit, where somebody might be donating or setting up a charitable trust with a really large lump sum, and they're actually donating, for example, more than their taxable income in that year. That they might have sold a business. Let's use that example. They have a large lump sum, they want to donate it or set up a charitable trust. You wouldn't necessarily want to donate it all in that year if it's over your taxable income, because you won't be making the most of your tax rebate. In those circumstances, it can be really good to stage a donation, and you could stage it over a number of years so that you can max out your 33% tax deduction. Accountants are great at talking people through this. We have some knowledge. We are not accountants, so I don't want to hold my hand up for that job, but we do have some knowledge on how it works. And I think that's a really important question to be looking at, particularly for those large donations.
Yeah, agree. Probably time for one more question here. There's a one for you at the bottom there, Cheryl.
Oh yes, has the IRD signed off on the gift trust's approach of applying the wholly or mainly test to the gift trust as a whole rather than each individual donor advised fund? Yes, we've had really solid, sound advice on this, and the IRD has confirmed it. So we got legal advice, which was confirmed. We're a consolidator. The donor advised fund is not a separate entity. The gift trust is the entity. So that is why we can apply 25% of our total funding distributions in any one year to international causes. What it means in practice is that we have some funds, we call them gift accounts. I should have said that at the beginning. So a donor sets up a gift account with us. We might have some gift accounts that distribute all of their donations internationally, and we have other gift accounts that distribute all of their donations to New Zealand. And we keep a very close eye on that and make sure that across the board we're not going over that 25% threshold. We're well within it. We've had a couple of pretty amazing years for New Zealand donations, and what that means is we have quite a lot of capacity at the moment. But yes, good question. We do keep a close eye on it.
So look, I think that probably brings us to the end.
Yes, I think it does. Let's wrap up there. We know that you'll all be very busy. So I just wanted to give a wrap up at the end and say thank you all for coming. We appreciate it. It's a lunchtime. It's a lot of information to digest. We want to thank you all for coming. Dentons will have been recording this, and there will be an email sent out to all of you. Feel free to forward it to others who couldn't make it. We'll also be sending it to those who registered and couldn't come along. Please contact myself or Jessie if you'd like more information. Wanted to give a big thank you to Jessie and to Dentons for hosting this. It's been fantastic to work together, and we'd love to talk to any of you about your philanthropy. So thank you very much. Have a great day.
Thanks, everyone.